Good to go.
Good to go.
Okay.
Awesome. Okay, well then, good morning, everybody. Welcome to our Realtor Education Series. Today, we are very fortunate to have William Wang here from CMHC alongside our CEO, Shubha Dasgupta. We have a great presentation for all of our realtors today, going through the CMHC Consumer Survey and spinning it really towards how it can benefit and really support you as realtors in your business. So with that said, I'm going to skedaddle and I'm going to let William and Shubes take the floor.
Incredible. Thank you so much, Mel. And thank you, William, for being with us here today and sharing this insightful survey and presentation that CMHC does. So I just want to take a moment to welcome everybody to this call. Thank you so much for joining us. Good morning, good afternoon, depending on where you are. We have viewers from all across Canada here tuning in to learn this information. As Mel said, this is just such an insightful presentation. It's one that I watch very closely throughout the year whenever CMHC does their report and does their consumer survey. Provides us a wealth of information into really understanding our customers. And for mortgage and real estate professionals, in an industry that's heavily driven by sentiment, knowing how our customers are feeling, what our customers are thinking, enables us to build a stronger, more meaningful relationship with them, and helps us and allows us to build more strategic marketing and sales initiatives on how we can continue to support them in their real estate endeavors. So thank you, CMHC, for doing this. Thank you, William, for being here. And let's kick things off.
I mean, of course, absolutely. Well said. I think that's a very good summary of what the Mortgage Consumer Survey is about. Again, once again, hi, everybody. My name is William. I'm the account representative with CMHC for the GTA. And of course, going over this Mortgage Consumer Survey, I think it's a very good, as you mentioned, insights into what mortgage consumers think. I think the fact that we can have such a robust survey and a very questions that are asked towards, in the most recent updates and in the past 18 months of the survey period, just in the things of, interest rate environments, how has, the current situation in terms of home prices affected your purchasing goals and whatnot. I think these small caveats can definitely benefit a wide range of professionals that work in this space. And of course, today is going to be geared more towards the real estate professionals.
Absolutely. And William, just maybe before we begin briefly, so number one, let me point out for all of you watching online, please make this interactive. Ask any questions that you have. Just shoot them into the chat. Feel free to raise your hand. We do have a moderator that's going to help us with that. So, make this interactive and be part of the conversation with us. Only in the chat. Sorry, only in the chat. Don't raise your hand. So put your question in the chat. For those of us in the room, same thing. Please feel free to ask questions. But William, for our audience, just kind of watching before you get started, for some of the people that might not know who CMHC is and what you actually do, would you mind just giving like 30-second spiel? There you go.
Absolutely. CMHC, Canada Mortgage and Housing Corporation. Most of everybody what you would know is when you hear CMHC is the first thing that comes to mind is going to be for mortgage loan insurance products. Anytime you have 5% down payment, anything in that realm under 20% down payment, that's going to probably map onto CMHC. Rightfully so. But I'd be remiss if I didn't go over the other things that we do here as a Crown Corporation. We have a lot of marketing data, and of course, the Mortgage Consumer Survey is going to be one of the researching tools that we have. Also, of course, our work with the First Nations housing, Indigenous fronts, and of course, information for first-time home buyers in 8 different languages. But all's to say, all these points that I just listed all actually encompass one goal, that by ensuring everyone in Canada has a place to call home. And really, all these things that I pointed to really hone in on that.
And just to ask some of the hard questions off of the bat, we don't ease into things here. So I know a lot of people believe housing and real estate to often be political, and CMHC is a Crown Corporation, obviously, funded through taxpayer dollars. And today there's always the argument and the debate on whether Bank of Canada is truly independent of the government or whether there's influence from the government. What's CMHC's kind of role and position? Are you guys an independent vehicle solely focused on driving housing, or do you have relations or interactions with the government on a regular basis?
I would say as a crown corporation, I would say in general, we are more so a housing agency that has that goal in mind. And of course, there are multiple fronts in which we do it. And of course, our pillars of more so how we go about that goal. And of course, financial stability is definitely going to be one of them for the Canadian housing system. And of course, we do make recommendations to OSFI and whatnot. But in terms of having a synonymous relationship with the Bank of Canada, I would say we're more so focused on that housing front, our housing agency, and those initiatives that we do, whether it's our funding programs, and of course, through our mortgage loan insurance.
Amazing. And CMHC has been an incredible supporter of the mortgage industry for a very long period of time. And, when they say that their goal is to help Canadians get into homes, we truly see that on a day-to-day basis. They're so supportive in their products, so supportive in their data and information, and things that we may not think about. You have on your slide here, MLI products and, MLI Select as an example of, helping developers get more multi-unit residential housing into the market and into the environment, which is something that's so well needed today and such an incredible product, in my opinion, for those that understand it and utilize it to its fullest capabilities. So thank you so much for what you do for our industry.
Well said, Shubha. Well said, Shubha.
Let's jump in, man. Let's get into some numbers, some facts, and some figures.
Yes, let's talk a bit about the survey. A very busy slide here, but I wanted to at least go over the sample size that was taken for this survey for this year. And keep in mind here, this was done back in January, but this is surveyed more so asking on a period of 18 months. And for our 4 sections here in terms of just across Canada for markets, about 700 per market. And of course, for the total amount of surveyees, about 3,800. Now, when we look at the breakdown of the people that were surveyed, and of course, 56% of them are married. But one thing to note here is 80% of them were born in Canada. And just looking at the composition as well, it seems that they have some sort of education, college or university educated. And for the major breakdown of the age group, 35 to 44 years old is probably the highest amount in terms of people that were surveyed.
Perfect.
Now, what's interesting to note here is that 40% of households earn 105,000 or more per year. But from our most recent housing market outlook, it seems as though for an average home purchase with 30-year amortization, 39-44% GDS and TDS ratio, with 20% down payment, it seems for average household income needed to qualify was around $185,000. So that speaks to more so, okay, we're probably seeing more a shift towards more income per application that's needed to qualify. Rightfully so, just speaking in terms of Ontario in itself, high home prices, and then we talk about the qualification rate as well. These factors definitely push that higher income year over year.
Yeah, and affordability is obviously a huge topic of conversation and one that is going to be discussed throughout your entire presentation. And, you can kind of see it there, right? From the fact that, majority of households are earning less than $105,000 when you have 40% earning more. And, as you mentioned, you need 185,000 to get into the average home across this country. So yeah, let's dig deep into some of these as we go throughout.
And looking at the people that we surveyed, 68% of them had single detached homes. And just wanted to at least get an idea of what's happening out there for more so in the markets of home purchases. But one thing to note as well, when we look at respondent profiles, it seems as though on the younger side for the respondent profiles, they're more likely to get new construction builds. What that speaks to is when the 30-year amortization does come into effect for those new purchases, any real estate agents out there that are working with more so a younger audience can probably expect that younger clientele profile to purchase those new builds. So in the realm of 30-year amortization for less than 20% down payment, they're probably gonna benefit from it.
Yeah, and that's an interesting topic that you bring up, and I know not specific to the survey exactly, but as many of the viewers on this call know, there was recently the introduction of a 30-year amortization for insured mortgages on new construction properties. So this is a product that's directly impacting CMHC as one of three mortgage default insurance providers for those insured mortgages. Now, one thing that I always have talked about when it comes to this 30-year amortization on new construction, there's kind of varying thoughts on how much or how little is going to move the needle. But I think one thing that it really does is that it opens the door for potential, easing later. I don't think that government policy will ever jump in 2 feet deep into any policy. So this is kind of dipping their toe into seeing how much or how little does it impact the market? Does it impact the economy? Does it change inflation? Does it help home ownership? And if they see things moving in a positive direction, it opens the door for them opening up 30-year amortization potentially across resale properties or more, but maybe widening, the category instead of first-time home buyers solely. So I think it's a move in the right direction for all of us on this call. And for someone who's been in this industry for almost 2 decades and seen regulatory rules move in the opposite direction for the entirety of my career, seeing mortgage rules get tighter and more strict, to see some leniency is actually very refreshing.
I think that's very well said. And just in terms of mindset, I think that's a very good way of looking at it. We want to keep in mind, any new policy that may be introduced should keep first and foremost in mind in terms of spiking demand. Demand is already very high. If we introduce new policies that are going to increase that further, is that going to be healthy for the housing market? And when you mentioned, they might extend that over to resale, that probably is something that they may look at, but for now, this is definitely a good step in the right direction.
Absolutely.
Okay, so when we look at top reasons for buying among those home buyers, we want to look at the biggest breakdown of that, which is home is a safe and secure investment. Now, one thing to note here is that what's not on this slide is actually the biggest drop in the past 2 years, which is getting interest rates. Making sure that the competitive interest rates, taking advantage of that competitive interest rate, was actually the top reasons to buy actually back in 2022. I believe it's around 38%, but now it's actually dropped to 10%. Now, of course, definitely speaks to the rate environment that we're in right now. With the increase back 2 years ago, with the 300 basis point increase. But at this point, it seems as though home being a safe and secure investment is the top of mind for consumers.
But it also gives some really good insight, right? And the insight that it really gives is that obviously the fact that Canadians still believe that a home is a safe and secure investment, shows us the stability of their mindset and understanding the value of that asset, right? So they believe in real estate as is presented from this slide. And the fact that you see a drop off in their belief of interest rates is actually something that could be changed by our industry and our community here, real estate agents and mortgage agents, because we can talk to them about how interest rates are short term, right? So interest rates, albeit not favorable today, doesn't mean that they don't go down in the future or they don't change in the future. So if somebody believes in the home as a safe and secure investment over the long term, maybe it would be remiss of them to not consider that interest rates are only a short-term impact or a short-term obstacle right now. And that if they don't overlook that, they may miss certain opportunities for further long-term benefits.
Absolutely, absolutely. Even just historically looking at interest rates, seems as though the rates that we're at is pretty comparable to what is usually out there in the housing market. I do think that we were pretty fortunate to have such low rates for that period of time that it was. But I think people need to kind of just realize that we're probably not going to get back there in terms of low rates anytime soon, or even just ever, really depending. But of course, I'm not going to really stake a strong position on ever going back to those low rates, but there's expectations of the rates should definitely be on a more healthier mindset in terms of what that could be.
And we talk a lot about it here internally at Pineapple amongst our group and amongst our agents and brokers, is that when you look at all of the underlying data, there's nothing there that indicates we're going to see a slow off of demand, We have large population growth, a vast flow of immigration. We have more and more Canadians reaching the home buying stages of their lives. We see every indicator and every sign that future holds more demand than less for us. And if Canadians believe that the home is a safe investment into the future and into the long term, and all of this underlying data shows that there's continuous demand underlying, then it's really wise for us to take caution in opportunity that's available to us today versus what may not be available to us tomorrow. Short-term interest rate impacts, I believe, are something that, many Canadians think are negative, but if you have the ability to qualify and get into a home, these interest rates aren't going to last forever.
Right.
Yeah.
Now we wanted to look at, where their living situation was prior to owning a home. So 71% of first-time buyers were renting before they bought their first home. Of course, 28% were living with family. So pretty interesting to know, where these renters were, more so situated in before. But it seems as though a majority of the breakup were renting, whether it's friends or family and whatnot, or even with their spouse. And then, living at home, of course, with the 28%, save more money getting to that first home.
And for all the realtors on the call here today, that shows me something very interesting. It shows me that your customers that are going to buy are your customers that were renting. So for those of you that are helping, younger Canadians or, Canadians that are kind of first arriving in this country get into home ownership via rentals, 71% of them are, in turn, the ones that are purchasing homes in the future. So don't overlook the power of, a potential rental or a customer that is looking to rent right now, and what that might mean for their future as a home buyer or a homeowner.
Now, 53% of previous renters typically rented for less than 5 years before buying a home. And there's going to be a slide in upcoming on just average time that people are going to rent. But of course, for newcomers, this one is definitely going to speak to newcomers a lot. Newcomers are going to be renting a lot more. So of course, when we talk about prospecting clients, what's out there, when they're in those rental stages, if we're working with newcomers, they're going to want to get into home ownership. But of course, that rental stage is definitely something that they are most likely going to be through.
And I'm looking at your graph here, your chart here, and obviously 1 to 4 years sticks out as the kind of overwhelming time frame of people, how long people are renting before buying their first home. Do you guys have any information or any insight into, why? Is it saving down payment? Is it that they just don't like spending money on rent anymore?
Actually, in terms of why, we don't have more so the breakdown of why, but it's just more so timelines that they kind of save and then move into home ownership. But in terms of the why, we don't.
Got it. Well, look, it shows that it's a pretty short period of time. As you mentioned, 53% are going to be renting for less than 5 years before they decide to buy. So, there's a vast pool of first-time home buyers essentially living in those rental units right now.
Absolutely. Now, 39% of respondents share a home with other adults. Of course, this excludes spouse. So it pretty much speaks to multi-generational living. Maybe more so to ease up on rent prices and whatnot. And even if they aren't renting, just because of inserting more, one example would be for family members. That's probably a more common example. That definitely just speaks to the situation in Ontario. Of course, home price is definitely very, very high. And just to alleviate those pressures of renting, we see more people just more so sharing that space.
Yeah, and multi-generational living is something that's so common in other parts of this world. All throughout Europe and Asia, multi-generational homes are almost the norm, the standard of living, right? So do you see a lot of that growing when you look at kind of past years data, and do you feel it's a combination of both lifestyle and immigration and people kind of accepting this as a lifestyle versus a need through affordability?
That's a tough one. I'll be honest with you, that's a tough question, and I wouldn't have the previous year's data to really compare, but even if we just look at even if you just look at some data from Terranet, I know I looked at some data from Terranet in terms of year over year, first-time home buyers on title. We tend to see for Ontario that there seems to be a higher year over year growth for 2+ people on title, and a more so decline of one person on title. So even just inferring that data, it just seems to be a growing trend, even if we're just looking at the first-time home buyers market. And with in this, it's a multifaceted approach to really the solution to more affordable housing. But even if we just look at that, it seems like year over year it's going to be increasing a little bit more.
Great. And I mean, for the realtors on the call, what this means to you and your businesses from a mortgage perspective is that for these 40% almost of respondents who are willing to or do share a home, it's greater qualification, right? When you have additional adults, whether it be elderly parents that are living there or grown children, generally there's some kind of income that can be used to help support that application, whether it's pension income, through CPP and old age security, or, through third-party pension that might be received from previous employers into your retirement years now. All of those things matter when it comes down to a mortgage qualification. So being able to utilize more than husband and wife income or spousal income is very important as part of the affordability and the home ownership journey. So I think this is a conversation to be having with clients when they're talking about home ownership and what type of affordability or property types they're looking for. Maybe asking the question, not just of, hey, can you get any down payment support or any co-applicant support, but are you willing to consider multi-generational living, and can we bring these people in on title to be able to add to it? And I think the second component of that, and it's something we're probably not going to talk about in detail today, but in the federal budget, it was recently announced this year that they're allocating a portion of funds towards low-cost loans for those looking to build additional suites into their properties, right? So if you want to have an in-law suite or something of that nature, and this is something that's an opportunity for you, you may be able to access other functions and other features that the government are going to be rolling out to be able to aid that.
Now, of course, more so continuing that conversation of multi-generational living, 12% shared the purchase of their home with an adult family member or roommate that they live with. So again, more so seeing a growing trend towards that multi-generational living, and even just supporting my previous talking point on more people on title, seems that that's more so a growing trend there.
And I don't know if you guys would have this insight, but are you seeing a lot of insight of like younger Canadians buying together just to help stave off affordability concerns?
Unfortunately, we wouldn't have the data on that in terms of like just breaking down age groups when they're purchasing a home together. We wouldn't have that on hand, but just again, looking at just the numbers in year over year, even if we were to say that half of them were young respondents, I would say it's still growing.
Yeah, because that would be interesting, right? Because I feel younger Canadians today, the younger generation as a whole is much savvier than previous. I think that's always the case. And, as more of them are, learning the value and, a potential investment return and return on investment of home ownership, you could almost see more of them, instead of saying, hey, let's shack up as roommates, let's shack up as homeowners and kind of, value from some appreciation together, and, be able to then take that money and do with that we choose separate.
Yeah. Okay, I mean, this more so goes into the conversation of awareness of programs that are out there to assist those first-time home buyers, and really what this means to realtors out there in terms of your business is, if we're prospecting clients, whether it's their family members, or even if you just know of maybe they have a daughter or son that's looking to buy in a few years, even just making them aware of what's out there for them. First-time home savings account is one of the programs that's out there, or registered accounts that's out there. 71% said they're aware of it, but 33% said they utilized it and participated in that program. Again, more so talking about the future, just in general, how you can direct them to things that can make that home buying experience much easier.
Yeah, and that's in my opinion, 33% participating in the program is a very big number for a first year program.
But absolutely, absolutely.
Right. So it really shows to the value of it, or at least what that generation believes to be the value of it,
Right.
and how it could help. So, to see 33% already adopting to it and participating in it really is an encouragement that we should be more actively ensuring that we're raising awareness and talking about it with that younger generation, that renter generation, as they're preparing for and saving for that down payment.
Of course, I mean, just the down payment is usually like a big hurdle, whether if it's not bank mom and dad, it's going to be some means on their own. And really, this is a great tool to help them get into that.
Fantastic.
Now, overall, 85% of mortgage consumers search for at least one piece of information online. Even when we just talk about what's the most pressing issue, and even if we just look at the different points of when the survey came out and just the same question being asked, seems as though this year, and rightfully so, interest rates is top of mind. When we look at the costs out there, or even just the qualification rate, this absolutely should be top of mind for people, because whether if they can get into that home is, predicated on the interest rates, and really they want to look at what the best rate is out there for them.
Well, I mean, every dollar counts in today's world, right? Higher cost of living, people are impacted by high interest rates in all aspects of their life, additional taxes, additional cost of goods. So I think that it really shows some insight into that consumer philosophy, that they're watching their dollars and cents right now. So how can we help them in this process? How can we help them both identify, interest rates aren't everything, and sometimes saving on interest rates on this side might cost you more on this side, but also helping accommodate their need for understanding what's important for them. Right. So I think what's very important here, and what this shows me, is just asking the question of what matters to you and why. Right. If interest rates are important to you, why are they important to you? And when you ask the question why, you'll often come to understand a little bit deeper, and you'll be able to provide them many different solutions outside of just the one that's being offered. As an example, if it's, interest rates are important to me because of cost associated with home ownership, well, I'm sure you can introduce other concepts. It could be, looking at lower property or lower value properties. It could be looking at extended amortizations to reduce the monthly payments, right? It could be adding on co-applicants to help support the file. It could be, purchasing a property with an income suite to offset some of the costs. So there's many different strategies that can be used when you know why. But I think what this really shows us is like what Canadians are interested in, right? So I think that's a really good insight for us.
Of course, and it's one thing to guess what Canadians are into, but it's another to really understand what is actually pressing them.
Yeah.
Now, this is something that's pretty interesting, and this is pretty similar to last year as well. We do see the use of websites to gather mortgage-related information dropping year over year. And really, it's more so shifting, and for the younger crowd, it's definitely going to be a more focused to online to get some more information. But when we look at turbulent times such as this one, for high interest rates, high home prices, it seems as though they want to kind of take a step back and do a more hybrid approach. They want to see that professional. They want to see the real estate agent, and of course, bring in the other professionals as well to help them navigate through just the interest rate market, home purchasing market. And even though they do get that information online, they still want that professional assistance.
Yeah, I think, as we all know, you can only gather so much information online before you need someone to be able to validate and get into the details of it. So albeit that, I'm very supportive of online and digital presence for sharing information, I think it's a must based on what you're sharing, that, customers are going on web pages to gather information. It's also a must that, we can bring them into our businesses after that digital introduction, and help to provide them more details that they need.
Of course, and just speaking to how this can benefit your business, it's just the fact that they are still looking at information online. What is everyone doing to direct traffic over to the sites that they may have? If you have a site that you use to market your mortgage information, and of course, we're going to get into social media, because I think social media is absolutely important to kind of talk about, because whether we're talking about a more fast approach in getting mortgage information, social media does fall into that. And it seems as though Facebook and YouTube are the most dominant spaces in terms of where people grab their information. Now, of course, we can, when we look at different platforms, it's going to skew towards the audience that's going to be for that. I know TikTok is definitely more so towards the younger audience. But interestingly enough, TikTok was actually one of the biggest players in terms of social media use around 2 years ago, but it has seen massive drops over there. But for consistency wise, Facebook and YouTube has definitely been that player in the space for social media.
Yeah, and I think, for realtors that are listening in on this call, I mean, partner with your mortgage brokers and your agents to get this information onto your social platforms, right? Collaborate together, do weekly market updates or resource sharing. I know that the incredible agents here at Pineapple have a wealth of information, knowledge, and already accessible resources for you to share, but it'll help elevate your platform as the go-to spot for, these Canadians that are seeking that information and advice.
Right. Now, this is a slide I love going over, and before this survey came out, I actually thought that
Makes our audience feel really good, right?
You know what? But before I get into the slide, to be honest, I thought the most valuable person purchasing a valuable person in the home buying process was actually the wife. But surprisingly not, it's the real estate agent.
We know the truth, right?
But no, the real estate agent, even for just the third year in a row, they're considered the most valuable person in the home buying process. So, and even more so again, as I mentioned, during these times of high interest rates, high home prices, and even just looking at the second most valuable person, it's gonna be the mortgage broker, whether that's for rate conversations and whatnot. The fact that even just the real estate agent is sitting so high up there really speaks to the value and the insights that you bring over to your consumers.
Yeah, I mean, I think real estate agents are obviously an integral part of the home buying process. Essentially, every Canadian is going to access one to be able to go through this journey. And they share so much insight on geographic location, property type, needs versus wants, even just that physical presence of being there and kind of guiding them through this journey physically and obviously emotionally, as it's often roller coaster. But when I look at this and I see 50% of that number being real estate agent, mortgage broker combined, it really highlights the impact of working in a team and a collaborative environment, right? And ensuring that we're all working together towards that customer's end goal. But really what I want to point out on this slide is that third one, which is the family member, right? Those of you that are regularly involved in a lot of our sessions and conversations, you'll know that we stress the importance of making sure everybody involved in that transaction is involved in the transaction. And family members can be spouse, significant others, and kids, obviously, but family members can be the parents who are maybe being supportive of a down payment. It could be another family member that maybe has insight or been on the journey, who's a trusted resource and a trusted shoulder of information. So when you're beginning the process with your customers and your clients, don't underestimate the importance of the voice of the people they have around them that are non-professionals in this industry, and working to have them as part of your team and on side with what you're about to do versus opposing what you're about to do, because that voice of opposition, albeit third on the list, it's still third on the list. So make sure that you have all people involved is really one of my big takeaways from this.
Absolutely, and my takeaway would be, just as you said, the wants. They want a certain styles of the home and whatnot. And just going back to the real estate and the mortgage broker, the one and two, the fact that real estate agents is the first and foremost front that what everyone's going to see as the most important. It's more so a gateway into who you work with afterwards. So of course, mortgage broker is going to be second on that list.
Amazing insight.
Now, 63% of buyers had concerns or uncertainties during the home buying process. Again, rightfully so, just more so uncertain times, and even just sitting at the top of the list, paying too much for my home. I'm going to be honest here. When I did purchase my home during the time, I think in terms of not knowing if this is the right time to buy has definitely sat in terms of my top of mind. And, you know, when you look at it in hindsight 2020, it's, when you look at it, it seems as though it was a good decision because I had a real estate agent there to really help me navigate through that.
Yeah, and I think that, you know, when we look at, and again, you know, this is a survey, so this is customers' feelings. This is customer sentiment and what they believe, right? This is not, you know, factual information. Well, I guess it's factual because it's factually what they believe. But what really highlights to me when hearing about 63% of uncertainty is what can we be doing? What can you be doing as professionals and trusted partners in this journey to alleviate uncertainty? Right? If customers are facing uncertainty, I believe, and I look at that as a failure on my part. Because what did I help do to alleviate that? You know, specifically when it comes to like concerns about interest rates, as an example, like, did I take them through a proper financial assessment? Did I give them correct information on market trends and on what expectations are to help alleviate some of that uncertainty? You know, you can see the third one is unforeseen housing costs. Am I highlighting the potential unforeseen housing costs? And I know there's a slide later that talks about what those housing costs are, but are we going over closing costs with them? Are we going over potential repairs when we get down a little bit later in home maintenance? Are we going over, you know, what additional costs could be associated with getting into this home? So when I look at this slide, I look at it as an opportunity for us to really go through it and add into our processes and into our sales strategies, different areas that we can ensure that we're touching on to alleviate some of these concerns and some of this uncertainty.
Now, when we look at mortgage loan insurance, it seems as though, you know, 32% buyers required it. Probably a little bit more than what we probably expect in terms of in the mortgage loan insurance space. And just more so, okay, you know, mortgage loan insurance, less than 20% down payment, under $1 million. It seems, you know, at least there is some sort of presence there. But of course, for different areas, there are going to be more utilization, but that's more so dependent on the prices that are set out there.
So more people are putting more money down now,
Yeah.
basically. Do you guys ever see yourselves, and I know it's not part of the survey or specifically this conversation, but do you guys ever see yourselves expanding what, you know, mortgage insurance covers? Like, does it increase beyond the $1 million or does it increase beyond 20%?
I think, and that's the most asked, one of the most asked questions. I either get asked, does the maximum property purchase price going to be increased, or are we going to go back to 30-year amortizations? I would say these two things that do get asked pretty frequently with each other. I would say this is more so seen as a short-term solution in the eyes of CMHC to a problem that can't be solved by just increasing that mark. Give you an example. Just because if we raise that $1 million purchase mark to $1.25 million, just because we do that, I don't think that really assists that home buyer that has 5% down payment. So even if you do put 5% down payment on $1 million plus home, that doesn't really solve that affordability picture. It's more so seen as, again, that short-term solution, a kick the can down the road kind of deal to it. More so doesn't really help in terms of long-term affordability.
Interesting. Thank you for sharing.
And on average, it took about 4.2 years for people to save for their down payment. Of course, going back to that previous slide, or more so a couple of previous slides ago in terms of the average timeline. But it actually, for Ontario, it's around 6 years. Around 6 years to save for a down payment, even if we just look at averages here.
So, I mean, that really means that for those of you who think the home buying journey or the home buying sales cycle is, you know, 6 months, 4 months, 12 months, whatever it might be, the home buying cycle, as you can see, starts 4.2 or even 6 years, depending on where you are, right? Once a home buyer or a potential home buyer decides that, hey, I'm going to start saving up money to build towards a down payment, they should be in your sales process. They should be in your sales cycle, and you should be working with them on how you can help them reach that goal 12 months, 24 months, you know, 70 months from now, regardless, right? So this is, you know, very important insight on how long it takes for a Canadian to really go through the entirety of the sales process and cycle. Yeah. Question in the room. Go for it, please.
On the previous slide, there was the don't know category of 27%. So that's people saying that they don't know how long it would take, or
Yeah, I mean, like just how long overall like from beginning to end of how long they saved, they just weren't sure of like kind of where it started.
Oh, and the question in the room was, there's the don't know, at the end of this graph. So was it people that just don't know how long it was going to take? But the answer was that they didn't realize how long it did take. So they didn't have an answer for it.
For those who like saved up under a year, like if the down payment.
That's, I mean, we're getting to give the down payment right now, but it's partial mix of it. It's gonna be a partial mix of it, even if they just utilize RSP for that year that they have, but they do lean on family gifted down payment as well.
And just to be respectful of time as we do a time check here, I'd love for you to make sure that you get through all your
Of course,
slides.
of
So
course.
we'll just blast through some of it.
Of course, savings outside of RSP remain the largest contributors to down payments. And of course, that is going to fall under gifted down payments as well. But of course, more so short-term savings. But really, because of 32% that is outside of the RSP, and on even just average year saving up for that down payment for 0.2 years, really speaks again to that first-time home savings account, RSP account. What are we doing to at least make sure that they're aware of some things to make their life easier?
Yeah, and for those of you who were, from our previous slide, wondering why we should get family members and parents involved in the conversation, just look at the, below slide or below chart there that says gift from parents at 11% and
Yes.
family from 4%, right?
Yes, and just talking about gift from family members and whatnot, 30% of buyers received a partial or full gift for their down payment.
30%. Wow, it's a huge number.
Yes. And just going down here, I know saw 11% from the previous slide, but of course, from that as well, 23% of that they received a gift from parents. So still, and we'll probably see more of it more prominent in Ontario as well.
Yeah, and just on that note, very quickly, because I do want you to get through your slides, in my conversation with many Canadians, I've come to learn that, albeit that 30% of buyers receive a partial or full gift, many others wanted to, but didn't know how. So their parents didn't know how they may be able to access some of the equity in their home to support. They wanted to, they intended to, but because they didn't have liquid resources or liquid assets available, they thought it was an impossible for them. So I think that what that really shows me is the importance of having that conversation to make sure you're having a fulsome and wholesome, holistic purview as to what options are available. If you want to help, here's how we can support.
Oh, this is a repeat on the previous slide. When we look at average gift amounts here, average gift amount is around $77,000, and talking about that gift figure number, and even for Ontario, it's around $80,000, so on the higher end. So just on average, what we can expect over here, $80,000 that's needed for that home purchase.
Wow.
And 32% of buyers would have not been able to purchase a home without a gift. I think that definitely kind of reinforces that slide of why people are getting gifted down payments. It's just pretty tough out there in terms of qualification for that home.
And I know this is a big debate, obviously, that goes beyond our industry, but people believe home ownership to be something that should be accessible through their own means. Not that if I don't have a wealthy family member, then I can never own a home. But was that kind of the sentiment that was coming across on this survey?
In terms of sentiments, it's going to be hard to speak to that. I think what we can more so speak to is the gifted portion, like are they actually receiving gifted portions for their down payment? And it seems as though yes, they are receiving gifted down payments. So I think if we were to map that onto sentiments, I think we can definitely infer that it's going to be pretty tough there.
Yeah. Wow.
Now, 50% of mortgage consumers are concerned about defaulting on their mortgage payments. So about half and half that, half that they're not concerned, the other half that they are. So of course, talk about ease of mind. What are we doing out there to make sure that they're set on the right interest rates, or even more so purchases if they're looking to purchase within their means, or if they're purchasing beyond their means, are we able to at least alleviate that stress for them?
Yeah, and one possible solution here right off of the bat for all the real estate agents on the call here, get in touch with your past clients, those that you've sold houses to in past years. grab your mortgage broker if you choose to, give them a call and talk to them about, are they falling into this category of concerned or somewhat concerned? And if so, what can we do to help? How can we support, right? Your job is not to just help get them into that home, but it's to make sure that they can stay there comfortably, right? So please make sure that we're getting in touch with our past clients as well. And obviously that reach out leads to further opportunities, potential opportunities.
Now, 40% of those impacted or soon to be impacted by the rise of interest rates, they were actually contacted by their broker. Do see an increase here from last year, around 34%. But it says here that 56% were not contacted by their broker regarding mortgage interest rates because they actually probably, the borrowers themselves probably reached out to the brokers regarding the interest rates increase anyway. So of course, in terms of seeing that increase in informing them about interest rate increases, definitely is good, especially when we're working with a broker. We see that increase from brokers proactively reaching out, saying, hey, you know what, interest rates are going up because of variable rate interest, or even more so if you're in the home buying process, these were the rates before, and these are the rates now.
Yeah, and hopefully going forward, we can call with some better news of potential interest rate cuts, hopefully next week, but if not, maybe a month from now.
Now, about over half of consumers are satisfied by the way they're informed of the rise of interest rates. And of course, interest rates, even if they go up, definitely a hard and tough conversation to have, especially because it's something that's out of our control. So in the fact that there's informed and they like the way that they're being let on for the news about that is definitely good, especially when they're working with brokers. It just says that 50% of them contacted by brokers were satisfied on the way they were informed by it. Now, 48% of mortgage consumers contacted a lender and 39% contacted a mortgage broker. Similarities here from last year, but when we talk about contacted and actual mortgage advancement or mortgage origination, we can see that it's actually pretty similar. Yes, it skews a little higher for the lenders themselves compared to brokers, but it seems about the same for origination of the mortgage, about 48% for brokers and 47% for lenders. And among those who dealt with the broker, the main reason for doing so was because of the good service they were offered and, of course, the better rate that is out there. And it seems that is top of mind. Again, we've seen from the previous slides, rate is the top of mind. So when they work with the broker, they're expecting to get not just a better rate, but, of course, good service as well. Now, 59% of mortgage consumers believe it's important to have that face-to-face discussion in terms of finalizing their mortgage. Again, going into the previous slides of the importance of shifting away from the online conversation and more so working with a professional in person. So they still do believe in that face-to-face interaction.
Yeah, I mean, I think having that face-to-face interaction, albeit in a digital environment for document collection and providing them information and resources, they still want that validation, of course, right?
The biggest purchase of their life, if anything, they want to at least make sure they seal the deal with that.
Of course.
Again, more so influencing our top reasons for using a broker was the best rate that's offered. So really, really important, especially for the younger audience, or more so the younger buyers out there. Their top of mind is probably going to be interest rates. Actually, for everybody's going to be top for interest rates. So in terms of working with the broker, you can be sure that rates are definitely going to be handled for that conversation. Brokers presented about a little bit over 2.5 offers to their clients, and we do see that decrease from 2022 3.2, but seeing this little drop here in terms of average offers that are sent to clients. Now, just in terms of rates out there, probably comparable at this point, and we may see this drop a little bit further next year, or even just increased depending on where the rates go.
Yeah, and you can see, right here, obviously one of the benefits is that optionality and being able to present multiple options and multiple offers to a borrower.
Yes. Now, 44% of mortgage consumers were offered other financial products by their broker. And of course, for brokers themselves, probably in terms of informing them of different products that are out there, taking care of your clients in their needs and uncovering those needs of what they might have in mind. About 2/3 of mortgage brokers had that discussion with their clients regarding closing costs. Me personally, again, going to my example here, I definitely would have loved to be informed about closing costs. And of course, more so working back then, it was more so getting the deal done. But top of mind there, the land transfer tax, that was definitely something that was like a big point where just working through the numbers, all of a sudden we have like a 20,000 land transfer tax that I wasn't really informed about. So just working with the broker, at least informing their clients, putting them at ease of what's coming and not to be expected.
Yeah, and the unfortunate reality about humans and human psychology is that that one bad moment or that one bad memory often negates, every good thing that came before it. So you could be working with a fantastic realtor, a fantastic mortgage broker who's hyper attentive, found you the property of your dreams, gave you everything that you were looking for and more, but you forget to tell them about $30,000 land transfer tax. It surprises them at closing. They're really upset about that additional cost, and it negated everything that you did. That was great, right? So it really, really, really reminds us, as we're taking our customers through this process, to be mindful of the things that are important to them and not the things that are important to us, right? If we can ensure that we're providing them information that they value and that they need throughout this process. Remember, we do this every day. They do this once every 5, 6, 7 years. So what we think is very simple, easy, and normal is not to the average consumer. Make sure that you're continuously reminding them about cost, about potential impacts, about maintenance, etc. That's going to happen.
Yeah, absolutely. And just example out there, if I'm looking to buy something for $1,000 and I was told to pay $5 shipping, I would feel pretty blindsided if it's coming in the last second too. Right?
Yeah.
You didn't tell me before. Now, 52% of mortgage consumers noted receiving a follow-up contact with the broker. And of course, this is increasing and, a big decrease from 2022, but, it's more so increasing just from last year and just following up with them, whether it's for the rates, whether it's for anything out there in terms of renewals as well. They are receiving that call.
Which to me is just shocking, because the number should be increasing considering the amount of Canadians that are, one, coming up for maturity, and two, need support with their housing needs, whether it be because of affordability, because of higher interest rates, because of cost of living. Like, we as an industry as a whole should be contacting every single one of our customers. This number should be 100% right now, because this is the time they need us. So, let's heed this information and use it to change some of these numbers for next year. Chris.
Now, over 50%, 72% actually of mortgage consumers are satisfied with their broker experience. Again, it could be for that customer service that they were offered, and of course, subsequently that rates discussion as well.
They were all working with Pineapple. No, that would be 100%.
Now, 69% of mortgage consumers chose a fixed rate over a variable rate, 3 percentage point increase since 2023. And actually, as well, I would say, what's popular out there in terms of rate sentiments. I think this is very interesting. Now, 5-year fixed rate term actually remains the most popular term for renewal here. It seems as though, even though we do see a huge shift towards the 3-year fixed rates, I know 3-year fixed rates has been very popular, very competitive, rightfully so. I mean, just in terms of timelines and the rate that's offered out there. But overall, 5-year fixed rate still remains, or even just a 5-year term remains, the most popular at this moment for renewals.
Fantastic.
Now, funding home improvements and renovations, and the #1 reason for refinancing. I think funding home renovations is definitely the top of mind over there, especially when we look at the importance of why they're looking to, utilize the Purchase Plus Improvement Program, or even just refinance. They want to make those renovations to the home, or even just more so purchasing a home that just needs a little bit of work done on that. Seems as though funding those improvements is what they're most concerned about.
Got it. I'm going to give you the 5-minute reminder, and I'm also going to give a reminder to those online. If you have any questions, now would be the time for you to throw them into the chat.
Last slide over here, 23% mortgage transactions were for rental properties. So that rental appetite is definitely there, even when we pull these 3,800 people, and of course it does fall within the 1 to 4 units that they were looking to purchase.
So we can again see, a growing base of those that are looking to get into or purchasing investment properties. More and more Canadians obviously are trying to build these portfolios and, provide more housing to Canadians.
Absolutely. And we do have our highlights over here, more so a short condensed version on our website, so you can definitely check that out. Of course, this is more so a robust breakdown of a big survey, a very, very big survey, but of course you can get a full snapshot on our website.
William, this was very helpful. Thank you so much for sharing all of this insight, and I hope that our audience found it very insightful as well. Before we wrap up, we'd love to open up the floor to anybody in the room or online to see if you had any questions for William or myself regarding any of this information or otherwise.
Thank you, Shubha. I think before we get into questions, I definitely do want to say thank you very much, Pineapple, for having me over here to present the Mortgage Consumer Survey. Now, of course, for the audience out there, before you ask your questions, please fill out this quick 1-minute survey. If you have your phone handy, I know you guys probably do, please scan the QR code. It's a quick 1-minute survey on my presentation over here today. Of course, anything that you found insightful, I definitely do want to hear from you guys, but thank you very much.
Amazing. We can all take away a little bit of a tip from him. Make sure you're asking your customers for feedback, okay? Get those Google reviews. Thank you so much, William. But yeah, if anybody has any questions,
Alan? Nothing in the chat. It seems like everybody was following along.
Marlon's got a question here.
Yeah, I have one question about the source of the down payment. I kind of found it very surprising that actually not a lot.
Marlon, do you mind if I just walk over with the mic just so we don't have to repeat the question? Okay.
No worries. I just found it very surprising for the source of down payment that such a small amount came from RSPs, FHSA. I mean, FHSA just opened recently, but RSPs, and obviously a lot came from gift. Now, have we looked at the reason why so little comes from RSPs? Is it because maybe the banks aren't really supporting the clients in educating them in RSP loans, how to get tax refunds and all that stuff? Because that is really a very effective tool in order to, fast track your down payment for a home purchase.
In terms of, our, it's because the banks haven't been doing the work. Of course, I think that's it's gonna be tough to really track, but I think what we can kind of infer is, real estate agents out there, brokers, if you can at least, hold their hand and say, hey, these are some of the things that are offered out there, they can make your life easier, because on average, you're gonna be about 4 years before you get into that home. So plenty of time for you to at least make full utilization of that program. That's all. Okay.
Amazing. Well, with that being said, I think we've hit it right on the nose here for time. So once again, William, CMHC, thank you guys.
We do have a question.
Oh,
Two
okay.
questions. Well,
So does the condition to provide insured loan vary from city to city?
condition. So when we talk about condition to provide insured loans,
I think they mean the guidelines for insured lending.
so for CMHC, for our insured guidelines, it's very straightforward actually across Canada. Just to know, just what really makes us stand out as a crown corporation, and even just to competitors, is that we insure anywhere in Canada. We insure anywhere as long as it meets our general property guidelines that is posted on our website. As long as it has those guidelines, we will take a look at the application that is coming forward to us. And I do get occasionally asked, for mobile homes, on lease lending, modular homes, we do cover those as long as we meet those guidelines.
Yeah, CMH. So all mortgage insurance requirements or guidelines are, the same across the entire country. It's not city to city applicable, but I will say, to reinforce William's point, that CMHC has a lot larger geographic coverage and property type coverage.
Awesome. And then one final question. Yeah, I see it pop up there actually. Maggie said, great information here, William. On one of the first slides, I noticed the number of new to Canada was very low. Do we have any information on why this might be?
And she continues that with a follow-up message.
Yeah.
And it says, does this mean that not many respondents were actually new to Canada?
So does this mean not many respondents were actually new to Canada?
I would say, I mean, the question was asked as with not many respondents new to Canada. It's gonna be tough to say in terms of, how we polled or how we went about polling that survey data. So I can't give you a concrete answer on as to that part. That's more so going back to the methodology that was taking place in terms of polling for these surveys. So it's really hard to speak to that and really hard to state a position on that, unfortunately.
Perfect. And with that being said, I think we have come to time. And if you do have any additional questions, if you don't mind, maybe just forwarding them off to the team. And we can certainly get back and make sure that we're responding to you. Just want to be respectful and mindful of everyone's time here.
Thank you.
Thank you so much, everybody.
Thank you. I'm just gonna use the washroom really quick.
I gotta just run for it all. So. Yeah, I'll see you. Thanks, Alex. Thanks, everybody. Are you on that?
No.
Oh, wait, don't, and another screen.